We had a very exciting second quarter. We have some great performance in some of our business units, exciting new leadership changes in our beef division, and we also announced a proposed acquisition of Seara Foods in Brazil. So we've lined up some key leaders in the company today to talk about all these topics. We'll hear from our JBS USA leader, Andre Nogueira, on our performance the first half of this year. We'll also hear from our leader of our JBS US, Australia, and Canada beef units, Bill Rupp. And then we'll close out our presentation with our global leader, Wesley Batista, to give us a little bit of color on the Seara acquisition and what that means for us as a global business, now that we are the largest poultry company on the planet. So with that, Andre.
Thank you. Good morning.
Good morning.
Respect for everyone that is stand up, and Bill, because of your age, I'm really concerned. I'll do this very fast. Of course, we've not announced the results yet, so I cannot tell numbers, but I'm going to try to do as best as I can to give a view, a picture about how was our performance these first 6 months. And great to be here and tell that our second quarter was much better than our first quarter and better than the same quarter of last year. So we are moving in the right direction. With that, how I change this stuff? Yeah. I'll be faster than the slide. So at the Holds level, talk about Holds is everything. Is beef, pork, chicken, US, Australia, Canada, Mexico, everything together. So we're green, we're better than planned. We're better than last year, same period, year to date, so 6 months. And we generate a good and strong cash flow on this deal. So much better picture than was in the first quarter. Of course, not all the business performed the same way, so how we did by each business. Pilgrim's, we announced the results next week. But it's doing very well, continue the same trend that we saw in the first part of the year, in the first quarter. The second quarter continued the same trend, so congratulations Bill and the whole team. We're better than planned, or better than last year, we're generating free cash flow, and we continue to gain compared with our competitors. So Bill will be here in the next quarterly meeting to tell how we'll be in the third quarter. And I hope Bill, not show you today, then you have the opportunity to come here and tell that we continue to improve and continue to move high. Beef, we had a very tough first quarter. Remember that we did that comment. Second quarter, much better. We are still below plan, but we are better than last year. And we are moving the direction to be positive in cash flow. But again, especially in May and June, the trend was completely different, and the quarter is better and is moving the right direction, and I have a very high expectation, Bill, for the second part of the year. As part of the Bill's team, Australia, again, doing very well. Australia probably is moving to be the record year in our business in Australia. Much better than planned, much better than last year, with a very strong free cash flow generation. Australia is. And not only that, yesterday we had a discussion with Bill, Wesley, and the whole team in Australia until 8 p.m. We start the meeting at 4, we finish over 8. But not only the financials, I think that financials is just kind of a consequence of a lot of good things, but they're moving the right direction in turnover, moving the right direction in safety, so a lot of good things happen there. A new and strong managed team in place with the people in Australia that make the difference. Canada, we are not doing well. We expect much more, and I think that we are moving the right direction. Indeed, Bill will make some comments here, but we are not where we want to be. And I'm sure that next quarter we will have better things to say here. But at this moment, our performance is below our expectation. Pork, kind of in line with last year, not a lot of change. but below the plan, a little bit below last year. But again, with a lot of good indications of good things that we're doing, and I think that the second part of the year we will correct this and we will perform better than last year and better than planned. But again, it's not. I think that we are in the right direction. All the other indicators are moving in the right direction: pork, turnover, safety, the quality. I think that we are moving in the right direction. The market did not help us in this first quarter, but I'm not concerned about that. I think that we have the team in place and we are doing everything that we need to do to put everything in the green page again. Carriers, we just had a discussion with Rodrigo and the team. We're still struggling in terms of the financial performance. I think that we are improving. We see signs of improvement. We are not on the level that we need to be, and Rodrigo knows that, and the team knows that, but I think that they know what needs to be done to transform that. 5 years, market is very tough, but we're better than last year. And again, all the basic indicators of the business, it's in the right position. The market is really tough, but I'm pretty confident that we are doing everything that we can and everything that we control to put the business in the right place. I have no concerns here, and I think that the team is the team that we need to have, and they know what to do. It's just the consequence of a tough market, and we're going to see this during this year, but we are confident that 5 years is doing everything that needs to be done to put us in the right position. Overall, very positive. Again, much better quarter than the last quarter, much better quarter than last year. As a company, and put everything together. A very strong performance of chicken, a very strong performance from Australia, an improving performance from beef, and pork still strong compared to historical numbers. Overall performance for the business is good. It's not excellent. I'm sure that the third quarter will be excellent, but it is the right place, moving in the right direction. With that, I just want to say that we need to continue to do things that we believe. Work hard, take care of our team, continue to improve the quality and the communication for our team, make sure, especially the manager, that in everything that we do, we do look in the meritocracy first. That's what JBS is about, and continue to focus on all these small details that can put all this in green and can put all this in red. There's no big deal in this business. It's about the small details. It's about to have the right team in place. It's about to treat the people well and put the expectations, as you always set the expectation, make sure that our team understands that and move in the right direction. With that, thank you very much. Thank you for the quarter. It was a good quarter for us. I'm sure that next quarter will be even better.
Thank you, Andre. Now, all the way from the second floor, Wichita's own, Bill Rupp.
Thank you, Cameron. Sorry, I wouldn't drink it. Joe Andre, it is good to see you in a pair of jeans, changing the dress code for JBS. Wesley and I are taking notes. I want everyone to know I traveled with Andre on Monday, and he also had a pair of jeans on. I'm trying to determine if it's the same pair or if Andre asked me to talk a little about the changes we've made in the beef leadership structure, and so I think, number one, the challenge from my standpoint is my role is to change the red dots into green dots, or never to have red dots. So with that in mind, and looking at the number of red dots that are there in the beef business, it really became an exercise of looking in the mirror and kind of looking at myself the way I always ask my team to look at themselves and say, hey, this isn't working the way we need it to be working. What are we going to do about it? So, why the change? When we acquired the XL acquisition, which was a plant in Brooks, Canada, which brings a whole new set of opportunities and challenges with it, as well as a plant in Omaha, we really just got to a size where our business became very difficult to get our arms around it, and we found that we were managing things by averages really rather than digging down and getting into the details of the business. Our speed of reaction to what was going on in our business was slowing. We weren't operating with the crispness that we once did. We didn't have any time to really sit back and look at our business and say, hey, what are the market signals telling us and what should we be doing as a result of that? And as a result of that, we were just running headlong into bad situations in the market without figuring out how to navigate ourselves around or through them. And so it became pretty obvious we needed to look at our structure and decide what needed to be done to make our business more effective. So with that, I went and sat down with Andre and kind of laid this out in front of him, and in his CEO way, he said, Bill, what do you think we should do? And I said, obviously, I need to be terminated. And without hesitation, he agreed. And I said, hey, wait a minute. I'm still here today, that's a good thing. But what we talked about was, yeah, I needed to be terminated, and that the way we were running the beef business was not working for us. And we needed to figure out a way where all these things could be erased. So we really had to look no further than our backyard, because we had 3 business units within the JBS family that had already had this learning. Brazil Beef had this learning where they had 42 plants that they were trying to run as a central organization, and it wasn't working for them, and they split Brazil Beef up into multiple business units. Bill and his team went through the same thing a little over a year ago, where they broke their business unit up into different commercial operating units. Australia went through the same thing a year ago with Andre, where they broke it up into a north and a south, and again, 2 different businesses that needed to be operated in different ways. And so we essentially did the same thing, and my last slide kind of shows what it is, but we broke our business into a fed business unit, a regional beef business unit, and a Canadian beef business unit, with a team of common services that supports that across all 3 business units. And so we think with that, we'll easily accomplish the opportunities that I laid out on the first page. And so with that, I thought there was some interesting lessons learned. You know, the first one is you're laughing at my quote? You know, I think as leaders, we have to make sure that we don't hesitate to empower capable people with leadership opportunities and additional responsibilities. Talent development is all of our jobs as leaders. And we need to look for ways to challenge our people to take on that talent. I think so many times we kind of get caught up in our own headlines about, hey, I'm the boss and I'll make these decisions. And in doing that, we really don't enable smart people that can probably do those things better to become active in the business. Don't let your ego get in the way of doing the right thing. Hey, I liked running the whole beef business. That was a real kick to my ego doing that, but in reality my performance was diminishing in doing it, and so it was time to look in the mirror and say, let's do the best thing for JBS, and let's share some of that responsibility. And lastly for me, it was about, you know, I think one of my strengths, and Wesley always tells us, hey, you know, perform to your strengths, understand your weaknesses, but perform to your strengths. I think one of my strengths is I can breathe energy into an organization. I think I was becoming an energy taker instead of an energy giver. And so it was time to put myself back in a position where I could give energy to the organization rather than take it away. And yes, I think being a leader is like being a lady. If you have to go around telling people you are one, then you're not. Thank you, Margaret Thatcher, for that quote. I think it applies quite nicely, and thank you, Misty, for reading that quote and thinking of me. So lastly, and we won't spend any time on it, but you can see the red boxes with Al, Joel, Willie, and Brent is the 4 business units that are now under JBS Beef USA. And then on the other side are the corporate or common service areas of our business that will certainly go across the US and Canada businesses. Australia really is self-supported in those areas. So, you know, as you interact with these people and from a support standpoint, make sure you're talking to them about what are the changes and how does that all fit together. And if you're in a support role here corporately, how how do you support those roles? And we'll be working very hard on that in the coming weeks. We don't want to burn a lot of energy on that. We really want to burn a lot of energy on making our bottom line look better. So thanks for everyone's support ahead of time, and appreciate the time today.
Okay, and now, all the way from Sao Paulo, Brazil, my very own Wesley Batista.
Good morning, you all. So let me talk about Seara. You all heard that we agreed to buy Seara. We are waiting for the antitrust agency in Brazil to approve the transaction. That we expect that this will happen in the beginning of September. So what is Seara? How I can manage this here? Yeah, what is? Before I will back to this slide in the end of my presentation about Seara. Seara is a combination. So we are buying Seara from Marfrig. Marfrig did several acquisitions in Brazil. Seara was owned by Ceval, that became owned by Bunge, and Bunge sold Seara to Cargill, I don't know, 5-6 years ago, and Cargill sold Seara to Marfrig. But the Seara is not the same. This Seara that we are buying is not the same Seara that Cargill sold to Marfrig. It's a completely different Seara. When Cargill sold Seara to Marfrig, was a company that was doing 2 billion reais in sales, and the Seara that we are buying today is a company around 9 billion reais in sales, that is around $4.5 billion in sales. So Seara is a combination of multiple acquisitions that Marfrig did in these last 5 years. So Marfrig bought companies in Brazil that I will name here, and probably you don't know, but Da Granja, Pena Branca, Mabela, Seara, plus a lot of assets from BRF. So this is all these acquisitions is the Seara that we are buying today. So Seara at the glance. So Seara is one of the leader player in the food sector in Brazil. Seara, sorry, I went back. So Seara today is the second largest poultry, pork, and packaged food company in Brazil. So the largest is BRF, and Seara is the second. So it's 32 production units, 21 distribution centers. Seara has 45,000 employees, has a strong presence domestically and also outside of Brazil, international. Has a lot of well-known brands in Brazil, like Seara brand, like Resende, like Doriana, like Confiança. So it's very well-known brands in Brazil. Fiesta in Brazil is like the Chester, like here in US, the turkey here in US that is very, very famous. Borival. So Fiesta means Borival. Is quite, not means Borival, but so what is the capacity and where are the assets? So the assets is more in the south of Brazil. That is where is the chicken industry in Brazil is more in the south, and also the pork industry in Brazil is more in the south. So the majority of the plants is more in Minas Gerais, São Paulo, Paraná, Santa Catarina, and Rio Grande do Sul. So Seara does 2.6 million birds per day. That is around almost 15 million birds per week. So 16,000 hogs per day, 80,000 tons of packaged food products per month. That is around 180 million pounds per month. And with the Seara acquisition, we also agreed to buy a business that is a hide and leather business named by Zenda, that has a plant in Uruguay, South Africa, Argentina, and a cutting operation here in Mexico. So it's an interesting slide here. After this acquisition, JBS in a pro forma base and in a run rate base, we will be a $50 billion companies in terms of revenue. If you look, the biggest players in the sector, that is Tyson. BRF is one of the biggest players in the protein sector globally, and Smithfield. So we are a kind of a combination of BRF and, if you look JBS, is a kind of combination of BRF and Tyson. If you see Tyson, what they do is pretty much similar with what we do in US. So beef, we have the same size, chicken, close size, and pork, Tyson is bigger, but we have Australia. So it's quite similar what we have and what Tyson it is today. And Brazil, we are looking very similar to BRF. So if you put these companies, so we will be the most integrated protein player globally. So with presence in North America, Canada, US and Mexico, Australia, Brazil, Argentina, Uruguay, Paraguay, in the beef, chicken, pork, in the packaged food business, in the hide and leather business. So in markets and in segments that is very important to be a global player and presence in a lot of countries, and most important in countries that is the most competitive countries to produce protein and to be in this business. Some of the pictures about Zenda that I mentioned is a cutting operation, not a cutting operation, sorry, I'm thinking about cutting operation for beef. So it's a hide and leather plants that start from raw hides to finished leather, selling hides to BMW, to GM, to all these automobile makers. So it's one of the key players in the sector, as Zenda it is. So again, some of the products and some of the brands. So what Seara does in terms of product, ham and bacon and sausage and patties, margarine, hamburger, well I mentioned hamburger. So a lot of this kind of products, and pizza, lasagna, Seara does all this kind of products. So again, strong brands, very good products, a lot of opportunity. To give you an idea about the market and the chicken market, so if you look the chicken market globally, who is the largest chicken producers globally? So you have US producing 16.6 million tons in chicken. You have China, is a very fragmented industry, but producing 13.7 million tons, and Brazil producing 12.6. So it's clear, US and Brazil is the key players in the chicken sector globally. And when we look our business and when we analyze where we are operating in US, Mexico, and with our operation in Brazil, so we feel pretty good about that we are in the right place to produce chicken. If you look export, is even more strategic to be in US and Brazil. So you can see Brazil is responsible for 3.5 million tons in export and US 3.3. So Brazil and US represent 75% of the total chicken trade globally. So again, clear strategic markets to operate. For you to have an idea, the Brazil chicken production has been growing in average 6.4% every year. So coming from 2000 producing 6 million tons to now producing 12.6 million tons. So more than double in 13 years. So the chicken production in Brazil, the industry has been growing in a fast pace. So in packaged food products and frozen products, ready to eat products, so you can see from 2007 to 2011, the growth in Brazil is 12%. And the projection and the forecast is that Brazil will keep growing at 9% in these products. In frozen products, the same. The growth from 2007 to 2011 has been 9.6%, and projection is to keep growing at 9.6%. So very good growth for the segment, for this this kind of products that Seara produce. Brazil, you have been hearing about. Brazil is improving, so more people moving from lower class to more middle class, so people buy more this kind of products. So very, very good moment to get in this business. So I mentioned already, but what is the strategic rationale behind this acquisition? One thing that for us is key is the moment that we are. Beside to this slide here is the moment that we are. So we are in a moment, if you analyze JBS, our last big acquisition that we did was in the end of 2009, in the beginning of 2010, when we did the Pilgrim's Pride acquisition and the Bertin acquisition in Brazil. So we have been spending 2010, 11, and 12. These 3 years was very important for us to be able to be now looking and buying Seara. Why? Because we feel pretty good about our team. I have been here in Colorado this week talking with our teams here, and I need to tell you that I'm very confident with the structures that we have, with the people that we have, with all of our team, in the way that our business is going. In each part of our business, still a lot of things to be done. In different parts of our business, there's still a lot of opportunities to be captured, but I feel pretty good about in the direction that we are, the team that we have. So it's a very important moment for us to be able to go ahead and to agree on this transaction, because we feel very strong about our team and where we are, and also in South America. So we are in a moment that we feel that we have our business in our hands, and we will keep capturing the opportunities that we have. So the other point that is very important is the way that the Brazilian market is structured today. So BRF is a combination and is a consequence of a merger of the two largest companies in Brazil. That was Sadia and Perdigão for many years, producing chickens and in the pork and the packaged food sector. So they did a merger. So after this merger, they opened a clear space for a second strong player in the sector. That Seara is already the second and second player in this sector, but with a huge amount of opportunity to grow, to gain market share in terms of all these packaged food products, and to gain position on the market, because the structure that the market is in Brazil today is a very good moment to get there. So another point that is very important. So with Seara and with Frango Sul, that we already have a chicken business in Brazil that does around 1.5 million birds per day. So with Seara plus Frango Sul will put us in a clear leading international position in terms of our portfolio, our products, and being able to sell products from US, from Mexico, from Brazil, and from Australia to a lot of different countries, Canada and other countries in South America, is very strategic for us. So this acquisition is an acquisition that we are very excited about. It's finished. It's done. So this acquisition is an acquisition that we are very excited about. We see a huge amount of potential for value creation in this business. Seara is a company, is interesting because Seara is a company that has a lot of opportunity, but is not doing well today, and because they are selling, and we really like. I think our history is buy business that we believe we can go there and make difference. And Seara fits very well with this kind of opportunity that we believe we can go there. We feel that we have people, we have talent that can get there, can get our arms around the business and improve the business and turn the business around and make a very strong amount of money. For you to have an idea, the sector in Brazil has a history of double-digit margin. So this kind of, we expect to run the Seara business above 10% margin EBITDA. We call that a good range for this business is 15% margin EBITDA. And we believe, of course, this will take time. We will not be very soon. This will take a lot of effort, a lot of hard work, but we feel that we can get there, and if we are right, that we hope we are, we will create a massive value through this acquisition. Back to the previous slide, I'd like to finalize with this previous slide. So after the Seara acquisition, who we are and how will be our company after this acquisition. So we are one of the leaders company in the food sector globally, the leading company in our sector, in the protein sector. So we will have $50 billion in revenue in a pro forma base, in a run rate base. So 185,000 people we will be working together every day. So this is a lot of members and a huge amount of responsibility for all of us. So we need to take care, all of us need to think about that we are 185,000 colleagues and is a team working together, depending one to the other. So is a lot of responsibility for all of us. So we will be a company with a strong brand portfolio, expanding our value-added products with the Seara acquisition for sure. We will expand our business in the value-added business. Expand our distribution network, so we will be delivering products and serving 100,000 customers in Brazil every day. This is the amount of customers. So for you to have idea, JBS, we have 55,000 customers today. Seara has 75,000 customers, active customers, but for sure we have some overlap. So putting together, we believe we will be serving 100,000 customers every month and delivering product to these customers. So some numbers here, 85,000 head per day globally. We will be doing all of our business, 12 million birds per day, 70,000 hogs per day, 50 here and 20 in Brazil, 100,000 hides per day, processing hides from raw hides to cured hide to wet blue to finished leathers, and 25,000 lambs per day. So I'm going to finish here. Again, thanking all of you for all of your commitment, all of your hard working. Like I mentioned, and like Andre and Bill mentioned, we are in the right direction. Still a lot of things to be done. I'm confident that we are not rest, and we are fighting every day to get all this opportunity that is in front of us. But we will have a good second quarter, U.S. strong second quarter, and also South American. So we will release our results on August 15, JBS SA. This August 15 will be the earnings call. So we will be delivering good results for in our business for all the investors and for all the stakeholders. So again, thank you very much, and let's keep working hard as a team. This is the only way for us to be able to make progress. Thank you.
Thank you, Andre, Bill, and Wesley. I think we've all heard these numbers before, but it bears repeating. Our global population right now is about 6.5 to 7 billion human beings. And in less than 40 years, that number will jump to 9 billion. We're going to add 2 Chinas to this planet in a very short amount of time. And the great challenge for most of us in this room, at least the young folks in the room, is how are we going to feed the world? How are we going to meet that challenge? And I think it's a very exciting time for our company, because when you work at JBS, you're truly working on solving that global problem of how do we feed the world. So with that, I want to give people an opportunity to ask some questions of these individuals, if you agree.
We'll stay here.
And I'll repeat the question in the microphone, and then if you all could use the microphone so our folks on the phone can hear you as well. Chris Gaddis.
Yeah, my question is for Bill Roth. Last time you spoke, you outlined the difficult environment for your business and how that tempered your expectations. How are we doing midway through the year as judged against your expectations?
Okay. Chris's question for those online was, with the difficult environment we talked about at the end of the first quarter in the beef business, how is that manifesting itself, and how are we progressing against it as JBS Beef? Correct, Chris? Thank you for addressing that question to me, Chris. You know, I think we haven't seen quite as much tightness in the cattle supply as we predicted, although it has been there, and there was a very significant packing plant close in Plainview, Texas earlier this year in February. That certainly has alleviated some of the crunch around capacity utilization in the processing part of the industry. Still tight. I mean, I think on average packers are probably running less than 40 hours a week. We certainly are. But we've seen a good rebound in beef demand this summer, and we see going forward, at least into early fall, which is about as far out as we sell, we see relatively good demand from a historical standpoint. So we're optimistic that the year is going to be better than we felt like it was going to be coming in. We think we'll have some tightness in supply the fourth quarter, but generally the fourth quarter, especially with an improving economy, can be pretty good from a beef consumption standpoint with holiday parties and whatnot going on. So typically gives us a chance to charge a little more for our products. So I'd say we're more optimistic looking into the last half of the year at this point than we were 3 months ago when we looked at it and looked to change some of those red dots into green.
Mark, go ahead.
Wesley, what does the Chinese entrance in the U.S. protein market through the acquisition of Smithfield changes the global protein scenario? That's the first question. The second one, what happens to Tyson if they, you know, are they going to buy somebody or be bought? I mean, or just stand alone where they are?
Okay, so the first question from Marco Sampaio in risk management was, what is the acquisition of Smithfield by Xiangwei Ming to the global poultry business? And your second, I'm sorry?
Pork
To the pork business, okay. Protein business, good. And then your second question regarding Tyson?
Yeah, I mean, what happens to Tyson? You know, I mean, are they going to stand alone? Are they going to try to consolidate to grow internationally?
Okay, and will Tyson try to expand its international footprint?
So Mark, I think, look, when I see China coming to buy Smithfield in the US, I think it's a very positive sign, and I think will be good for the US market. I think this will help hog producers, this will help the pork industry in the US, and I think it's a clear sign that demand is growing, and especially in China. And I think China is important to think about and to analyze one thing. We have been seeing China grow in the last 10 or 15 years, and the biggest engine of the China growth is infrastructure. So what is pushing China to grow at 8, 10, 9, 10, 12% GDP every year has been investment in the infrastructure sectors. So, and we all have been hearing that China needs to move to support the strong growth in the coming next 10 years, expanding demand, and growing consumption internally in China. And it's interesting that because I believe that we are just starting to see this happen in China. And so if you see our numbers, yesterday we were looking, the numbers in Australia, the volume that is going to China, the beef volume that is going to China from Australia, this year is amazing. Something is really happening in China. For you have idea, in the first 4 months this year, we did more volume to China from Australia than the whole 2012. So, again, for me, what means China coming to buy Smithfield in US is that China will not be able to produce and to grow production in the same magnitude that consumption will grow in China in this coming year. So, and they are looking to secure supply and to have products to support their growth. Your last question about Tyson, I don't know what Tyson will do. I'm not looking what Tyson will do, I'm only looking what we should do, Marco.
Any other questions?
Ask Wesley what the U.S. his outlook for the U.S. economy is.
Let's let Carmen Kelly.
Yep, so the question's for Andre. So Andre, other than market conditions, what do you think the biggest challenge has been for JBS USA so far this year?
Can you ever repeat that? Can you repeat it in the microphone?
Yep.
So,
Can you hear me?
yep.
Okay. So Andre, other than market conditions, what do you think has been the biggest challenge for all of JBS USA so far this year?
Well, I think that Marco and Juice have been very good in some areas, more challenging in others. I learned with this guy here. That's a little bit fat than I saw the last time. Like you. That we need to focus on what we can control inside of our company. We should control our weight, by the way. So our focus, our opportunities, our challenge is inside. Is how we can be faster, how we can answer to different conditions straight away. I think that Bill changed the business unit, and the decision that Bill Love did in the past was kind of answer to this, how I can organize my business to be more aggressive, to be faster. So, challenge, be faster. Sense of urgency. Another big challenge for us all the time is make sure that everyone from the first level of management understand that the big asset of this company is our people. And this don't mean that we need to be just nice. That's not what means that people is the most important asset. It's being fair, it's make sure that you set the expectation, it's make sure that you try to help how the people can perform under that expectation, and make sure that you give the feedback when you are not achieving the expectation. So both our management team understand that concept that is part of the culture of this organization, that's part of what these guys have been doing for 20 years. It's a big challenge because of the size of organization. Another important point for me, and I've been trying to work as much as I can on that, we have a lot of good things going on in our business, a lot. You visit one plant and you see something really great. So I think that big part of my job is how I can spread this faster than this would be spread if I don't do nothing. So we saw in Worthington, 18% turnover. Wow, these guys are doing great there. How can learn? What can learn if that guy, how I can contaminate the other part of the business to move faster in that pace. So we have a lot of good things going on around this building. We have a lot of good things going on in each one of our plants. How can learn this fast? How can have the sense of urgency to change what needs to be changed in other parts to perform? If we perform in each one of our plants, in each one of the business, in the high standard that we have today in our company, we will not beat our competitor. We are going to kill our competitors. And that's what I want to do.
Okay, I have a question for Wesley. Wesley, a lot of us have seen in the news a lot of social unrest going on in Brazil, and I think a lot of us think of our our JBS family in Brazil with some concern and wondering what's going on there. Do you have any color or update to give us on the situation there?
So, Kevin, I look, actually, it's quite a big surprise for, I think, all of us as a Brazilians, led by the military regime, and people went to the street asking for democracy, and Brazil changed since then, and never saw anything like we saw in these last weeks, people in the streets complain. But after all this happened, I think everybody realized that was a good wake up. It was a good wake up for the government, for everybody in Brazil, that people is not happy, people is not satisfied what they are getting from the government. And I think everybody realized that this is a consequence of a good thing. It's a consequence of much more people in the middle class, so much more people looking the return that they want to get from government. So, and I think everybody realized that Brazil is not the same Brazil that was 20 years ago. A lot of poor people that was not, encouraged to say, hey, I want the return, I'm paying tax, I'm paying more tax, and I want return in education, I want return in the health care system in Brazil, so the government is not give me what I think I deserve. So I think everybody in Brazil is getting this, and include the government, in a good way. Say, hey, wow, we were not really realizing how the change in the society in Brazil is changing what we need to do to satisfy the society. So I think it's a good movement. Of course, in an ordinary course, no one was happy to see vandalism, people destroying things. That I think was after some of the manifestation got control, and I think it's behind. I think we are not seeing anything this more, but it was a good wake up.
Any other questions? Want to open the phone lines? Okay, we'll open the phone lines. If anybody on the phone has a question.
To ask a question, you may press star then 1 on your touch-tone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then 2. Once again, if you're on the phone and you would like to ask a question, please press star then 1 at this time.
Wesley, I have a question for you. Any additional acquisitions on the horizon that you could maybe share with us?
Okay, so we have a question from Sarah Forbes at Pilgrims of if there are any additional acquisitions on the horizon that Wesley would like to discuss this morning.
Look, I will tell you what, in our last earnings call, a lot of people asked me this question, and it was the hardest thing for me to answer, because this is a hard question. So, what I can tell you is, for now, no, we are not looking any acquisition. We need to get our arms around Seara. We need to digest Seara, do step by step. But I need to tell you, I think all of us, I think our team is a group of people that growth is in our blood. I think this is something that we like. We like the growth, we like the challenge, we like the opportunity that we create in our business when we are growing. So after we get our arms around Seara, after we are confident that we digest Seara, yeah, we will be looking how to keep growing our business, and this is part of our, I have been saying for investors and analysts, is in our DNA growth. So we cannot, we cannot try to work against this, it's in our DNA.
Okay, one last opportunity for questions. Please.
This is for Bill and Rob. Essentially, you said that the main reason why, but with the purchase of Excel, that we became too large for us to kind of manage it. Like, with the acquisition of Sierra, what can you kind of provide to the Pilgrims or our poultry division to make sure that that doesn't happen to them?
Well, I think those learnings are already there within JBS. Oh, I'm sorry. So the question was, from beef's learnings with size getting too large for the present management team to handle, what learnings can we pass on to Sierra with the quick growth that they're going to digest down in Brazil? So I think those learnings are already there. I think we actually learned in part from Brazil, as I said on the slide, and we certainly learned in part from Pilgrim. So I think Wesley is very good about not seeing boundaries when it comes to the businesses, and make sure that we're working across, you know, whatever boundaries people might think exist, to make sure we get that sharing not only between countries but also between proteins. And we recently had a management meeting up in Wyoming where we talked a lot about strategy and the business going forward, and clearly one of Andre's objectives is that there's more sharing and more learning that goes on between the business units, and that we don't draw hard, fast boundaries between our businesses. So I think a lot of good things happen in there that'll facilitate success with the impending acquisition of Sierra. And I might just add, I think Wesley looks really good today.
Just to say again, thank you, congratulations. The guys that have more green than red, the guys that have more red than green, have a lot of things to do. The opportunity is there, the team is there, the market is there for us. It's in our hands, it's in our control, and I'm sure that we're going to take them. So thank you again.